the carbon tax. So it's important for private families and individuals, and also very important for businesses to factor in the increases in costs that will flow through. You know, as we talk through, my estimate there, based on that Macquarie generation example, was that there could be somewhere between a 17 and a 20-25% increase in the cost of electricity sourced from those two power stations in the Hunter Valley. So electricity bills are going to go up. Gas resellers have got to add the carbon tax onto the price of the gas that they sell. That's going to flow through the economy, and there will be general increases in prices for all people and for all goods and services, because electricity and gas and those sorts of things are part of the cost of just about everything that we do. Associated with that, I think businesses need to carefully review their own pricing. If you happen to be locked into fixed pricing agreements that are of a long-term nature, well, you need to start doing some planning now. But also, if you have some flexibility in pricing, then you need to take account of those increases in costs that will come through. Businesses that receive the fuel tax credits will need to factor in a reduction in those credits. Of course, I suppose the whole point of the carbon tax is for us to reduce our energy consumption. So if it's possible for you as individuals, you as families, or as businesses to reduce your energy consumption, then that's going to reduce those increased costs for electricity. I've mentioned the fuel tax credits. And for businesses, I think it's very important to be careful about any statements that you might make in relation to your pricing and the carbon tax. Just like when the GST came in, the ACCC, the Australian Competition and Consumer Commission, has been given strong special powers, and if you happen to gild the lily a bit and blame a substantial price increase on the carbon tax and it's not justified, then you could be hit up by the Competition and Consumer Commission. So be a little careful about your statements there, but if it is justified, you certainly can seek a price increase on a justified basis. Okay, moving on to trusts. You'll need to have your tax agent make these TFN reports, which include the tax file numbers and the details of beneficiaries, to the tax office. I think this will be particularly be the case for the June quarter next year, but it may happen beforehand because there may be interim distributions from some trusts. And just be aware that it can be that if an expense is paid by a trust, that can be deemed to be a distribution for the purposes of the tax file number withholding tax. You recall we mentioned the issue of income streaming, and it would really be my recommendation that trustees are, as a general policy, looking to get their minutes completed for the distribution of the profit for the particular year by the 30th of June 2012. Associated with the streaming of trust income, there's been some other changes that have happened that have put in place Division 7A requirements, and I won't go into too much detail about that at the moment, but that last dot point's in relation to Division 7A and unpaid trust entitlements. Our second slide of recommendations with regard to superannuation. Companies and businesses should prioritise the payment of superannuation guarantee. This is on the assumption that the legislation will go through. Should prioritise it as a top-ranking creditor payment that must be made on time, along with your PAYG withholding. You should plan for increasing superannuation costs in your projections and budgets and so on which are incrementally increasing the cost of super guarantee from 9% to 12% through to the years in 2019. And make sure you've got your systems in place so you can report the actual superannuation that's being paid to the fund on people's pay slips. Brett's session on superannuation and succession. Review your superannuation death benefit nominations in association with your estate planning processes. So you can't determine what happens to your superannuation benefit, can't deem who it's going to be paid to. So you need to make sure that you've got the nominations in place that you want. You need to consider your insurances in your superannuation fund. Super is a good place to have life insurance and TPD and so on in a lot of cases. And that needs to be considered as part of your superannuation death nominations. And the last point there, of course, seek advice to ensure that your benefits can go where you want them to go. So if you want to leave your superannuation benefit to a parent, you may not be able to do it. If you want to leave your superannuation benefit to a sibling, you may or may not be able to do it. You need to seek advice to make sure that you can distribute your superannuation benefits how you choose to do so.